Weekly market insights, anticipating the road ahead. Hello friends and welcome back to another update part of our Market View video series. The past week has been nothing short of tumultuous, with bears firmly in control. Relentless selling pressure by foreign institutional investors exerted significant downward pressure on the indices, propelling them to fresh lows. The Nifty index reached a high of 19,557 and a low of 18,837 before closing the week at 19,047 levels. The selling was indiscriminate, affecting large cap, mid cap, and small cap stocks alike. Weak quarterly earnings reports from the IT industry leaders only added to the market's woes. October has proven to be a challenging month for the markets, but as the saying goes, there's always a glimmer of hope amid the darkness. Let's delve into what the upcoming week may hold and examine the likely trajectory for the markets. We'll also identify key levels that traders should keep a close eye on. As customary, we will analyze various timeframes of the Nifty index to gain a comprehensive understanding of the market's behavior. Before we get started though, if you haven't already, do subscribe to our channel and like this video. The monthly candle is gaining significance as we approach the end of this month, and the candle's closing appears to be leaning towards a bearish tone. We use the term leaning towards because at the time we are making this video, only 2 days remain in the month, and a significant rally on Monday or Tuesday could alter the fate of this candle, necessitating a change in our view. On the other hand, the weekly close is undeniably bearish and well below the 20-day exponential moving average. The breach of the weekly 20-day EMA after a 6-month span raises concerns for the bullish outlook, potentially shifting the weekly trend from up to sideways in the sessions ahead. In contrast, the daily closing exhibited strength, with markets concluding near the Friday highs. Friday's rally aligned with our expectations as markets found support in the novice cap area of 18,800 to 18,850 amidst oversold conditions. In summary, the analysis across multiple timeframes suggests a continuation of weakness in the upcoming trading sessions. However, given the market's recent rapid decline of nearly 1,000 points in a single week and its proximity to key support levels of 18,800 to 18,900, we shouldn't discount the possibility of an initial bounce at the start of the next week. In the upcoming sessions, we anticipate the Nifty index to approach levels between 19,200 to 19,300 before potentially resuming its downward trajectory. Traders should prepare for fresh selling pressure once Nifty nears these levels. Key support levels to monitor in the coming week are 18,700 to 18,600, an area of significance where the previous rally initiated, ultimately reaching new highs in the indices. Now, shifting our attention to other asset classes, we are closely monitoring whether USD INR continues its range-bound trading or breaks out. Crude oil, as we mentioned in our last update, appears to have established a range between 7,400 to 6,500, which offers a degree of stability to the equities market. It's worth noting that the relentless rise in crude oil prices was a contributing factor to the market's retreat from its highs. However, vigilance is warranted as any escalation in tensions between Israel and Palestine could swiftly alter the scenario. Gold has exhibited a steady upward movement recently. Nevertheless, it's approaching a previous resistance level, and further progress may necessitate a substantial catalyst. From a short-term trading perspective, it may not be advantageous to be bullish on gold, as the risk-to-reward ratio currently does not favor buyers. And with that, we've effectively covered our outlook for this week. If you found this video helpful, do drop a like and let us know what you think in the comment section below. We'll see you again next week with a fresh update, so stay tuned for that. If you've missed any of our previous market updates, be sure to watch those as well. And if you'd like to learn more about our offerings at Hedged, we would highly recommend you do so by logging in at www.hedged.in today. Feel free to join our Telegram group called Hedged Ideas and stay up to date with the markets for absolutely free. The link and scanner to join the group are on your screen and in the description below. Until then, happy trading and investing.